Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis.
I will end the war in Ukraine, I will stop the chaos in the Middle East, and I will prevent World War III from happening, and you have no idea how close we are.
Donald Trump promising an aggressive start to his presidency with a flurry of decisions lined up on immigration, tariffs, and energy. In a boost to the markets, the president-elect spoke with China's Xi Jinping on trade, TikTok, and fentanyl. Their conversation may set the tone for U.S.-China ties during the early days of the new administration. Meanwhile, TikTok has started restoring services in the U.S. on Trump's promise to pause enforcement of a law requiring the app's Chinese owner ByteDance to sell. We'll get you the latest political and market perspectives on Trump's agenda with Penta Group partner Andrea Christianson and Tribeca portfolio manager Junbei Liu. We also hear exclusively from the billionaire founder of Japan's Rakuten about the tough geopolitical environment for business as China and the U.S. compete for influence. Take a look at how markets are trading right now because we're seeing broad upside in Asian equities following that upside that we saw in the Wall Street session last week. Of course, the U.S. markets away for a long holiday weekend, but we are seeing Japanese equities higher as well as the Hang Seng Index at the moment. This, of course, as we also got those loan prime rate decisions from China's commercial banks being left steady for a third straight month. The PBOC has been a little bit reluctant to reduce rates given the pressure on the Chinese yuan. As we continue to see a stronger U.S. dollar, and there's a little bit of pressure in today's session, especially given that the Japanese yen has seen more strength. It's all about the BOJ this week. Of course, we are expecting that rate decision on Friday. The expectation is for a hike of 25 basis points. A very busy week ahead. Of course, we do have the inauguration of Donald Trump, but also the World Economic Forum in Davos happening right now, not to mention corporate earnings will be coming out as well. Let's start with the big news this week. Donald Trump is planning an assertive start to his second term, addressing supporters at a rally ahead of his inauguration. His promised rapid changes as soon as he takes office, including aggressive and sweeping border measures, while also reiterating his tariff and tax plans.
I'm thrilled to be back with so many friends, supporters, and true American patriots on the eve of taking back our country. That's what we're going to do, take back our country. Together, we're going to cut your taxes, end inflation, slash your prices, getting them back down, raise your wages, and bring thousands of factories back to the USA, right where they belong, and that'll be done through tariffs and smart policy. We will build American, we will buy American, and we will hire American.
Let's get analysis on what to expect in the first few days of Trump 2.0 and bring Bloomberg senior editor Derek Wallbank as well as our chief North Asia correspondent Stephen Engel. Derek, let me start with you. I mean, he's already promised, about 100 executive orders as soon as he is inaugurated. I mean, it's going to be a frenzied few days of the Trump 2.0 administration.
That's right, Sherry. Break out the Sharpies. Donald Trump is talking about, he just said close to 100 executive orders are planned within hours of his inauguration. There may be more in the days ahead as well. Trump has promised a sweeping move when he gets back in. Remember, he's been out of office for 4 years. And one of the things that was said about Trump's first term is that he was finding himself out for a while. Well, he's had 4 years in the wilderness, and he knows what he wants to do on day one, and he's going to go about in and do it. He was very clear during the campaign. He wants to tighten the border. He wants to bring federal workers a little bit more under the presidential control. Expect that to happen. Expect maybe a move on 5-day week to get put through. You can sort of go through a lot of Trump's policies, whether they go for energy or anything else, and think through to some of these things that may well happen within hours of him taking control.
And he wants to push back against Beijing, right? Something that has been consensus in Washington. So it's really puzzling, Steve, to look at how Trump is dealing with TikTok and that reprieve that they're getting.
Yeah, that's right. So he's actually going against what some of the main leaders in Congress, Republican leaders, including Mike Johnson, the House Speaker, and also the Senate Intelligence Chief Tom Cotton, who say there's no wiggle room on the law that was signed back in April because TikTok, they feel, is a national security threat. And that law basically came to fruition by Sunday when if it didn't find a U.S. buyer, then basically TikTok would go dark. And it did go dark late Saturday night for a few hours before Donald Trump came in and essentially said, I will sign an executive order giving a reprieve of at least 90 days. That's one thing that both Mike Johnson and Tom Cotton have said, well, there can't really be a reprieve. Keep in mind, because they need to get certified. Donald Trump needs to get Congress to certify the fact that there is a buyer in the works and it is already ongoing. And they need to have a qualified divestiture, essentially. But we haven't heard any of details of who might be lined up to buy TikTok. So is it valid? Is there a legal ground groundwork for that? And also, he's made a change. He says, look, we can sell half of it. He's proposing a 50-50 joint venture. ByteDance, the parent owner from China, and a U.S. buyer. But that also goes against that national security law. So why is Trump doing this? Well, he gave his justification in this soundbite. Let's hear from Donald Trump.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
So it was kind of a whiplash development over the weekend. Were they online? Were they offline? They're back online, but it's not over yet.
It's not over yet, but at least in the first few days, could we see some warming of ties? We heard from the Chinese vice president speaking with Elon Musk and J.D. Vance as well about future cooperation, Steve.
Yeah, of course, Donald Trump has been talking with Xi Jinping. We heard Mike Waltz, the incoming national security advisor, essentially saying that Xi Jinping and Donald Trump have talked about TikTok and they are trying to find an equitable solution. But again, does it go against the integrity and the intent of that national security law passed in a bipartisan way back in April? So there's still some convincing that Donald Trump has to do to Congress to allow this reprieve to go ahead. Keep in mind, the Supreme Court of the United States on Friday unanimously upheld that law and making essentially TikTok go dark on Saturday, albeit for a few hours.
Yeah, Derek, we continue to get some of the latest lines when it comes to that Chinese Vice President Han Zheng meeting with Elon Musk. And Xinhua now saying that Musk has says that Tesla is willing to deepen investments in China. It seems that the relationship is starting to gain momentum. We also had that phone conversation between Trump and Xi themselves.
The way that I would read this is that Trump is trying to leave room for negotiations with China, right? I would not expect the U.S. and China have necessarily right at this moment produced some brand new, feelings of warmth or sunniness necessarily. This is a space for negotiations. Trump still has big issues with China, and China still has big issues with the U.S. But we're starting out, it seems, on a slightly positive foot. Let's see how long that lasts and where this goes. Because I think, as Stephen was rightly pointing out, a lot of the issues that are happening with TikTok do have a time limit on them, even under Trump's plans. We still have this talk about tariffs. Let's see what Trump does in terms of what happens to be in that first suite of executive orders. He had promised tariffs on China. Do those happen or do they not? That would be a big signal. I would look at either way in there. Is there a global tariff? Is there not? That would be another signal I would look in there. So there are plenty of tangible markers we can look at going forward. But remember, Trump is somebody who's built himself as a master deal maker and negotiator, and he's going to try and leave space to do just that.
Bloomberg senior editor Derek Wallbank and our chief North Asia correspondent Stephen Engel there with the latest on the U.S.-China relationship as we continue to await those sweeping measures and aggressive measures that the president-elect has promised. Let's bring in Andrea. Christianson is a partner at Penta Group, a Washington-based data and communications consultancy. Andrea has previously worked as a communications director for Republican lawmakers as well as former California Governor Arnold Schwarzenegger. Thank you so much for your time today, Andrea. I mean, we were talking about the U.S.-China relationship right now and perhaps a little bit of a thawing of ties as we were expecting President Trump to take office. How central will the relationship with China be during Trump's administration?
Oh, it'll absolutely be central. I mean, Trump has always been about pushing and pulling. So he's going to be America first. But he also really wants to be the deal maker and he wants to be the fixer. And so I think the question at hand is, what is he going to plan to use as leverage with China? And how can he translate that into a win for America in his view?
Especially when it comes to tariffs being used as leverage, not necessarily in themselves an end goal, but perhaps a better tool to get what he wants.
Yes, absolutely. I mean, there's been discussions of tariffs up to 60%. But again, given the phone call he had with Xi Jinping on Friday, the invitation to the inauguration, and recent reporting that the President Trump plans to go to China within his first 100 days, I definitely think that there's going to be back to this push and pull. And one thing with President Trump is traditionally, we take him literally, but not always seriously in Washington. And so I think that we're about to see a bit of a flip on that, where we start taking him a little bit more seriously, but we don't try to dissect every word he says.
Which will just lead to more volatility and uncertainty as we try to decipher what his actual policies are, right? In your notes, you actually say that the two big things of this administration will be volatility and opportunity. We know that volatility is just the name of the game with this administration. Where will the opportunities be, though?
Well, it's a great question. And really, the opportunity space is in some ways limited by how volatile this administration is in a much more volatile world than we were in Trump's first administration. However, I point to two things that indicate opportunity. So the first is how instrumental his team seemingly was in the negotiation of this ceasefire between Israel and Gaza that went into effect on Sunday. And the second is that border crossings from our southern border into the U.S. plummeted after his election in November and have stayed low. And depending on how aggressive he gets on deportation, which 87% of Americans in a recent New York Times poll do support the deportation of illegal immigrants with a criminal record. And so if he doesn't kind of start deporting grandmothers, he might actually be able to get meaningful immigration reform done in America, which has evaded the last 5 presidents.
Which bodes a question towards the economic fallout and impact of those changes on immigration, right? I mean, there's a understanding right now that when it comes to even illegal immigrants, that they don't necessarily get all of the federal benefits, say Medicaid, but at the same time, they do pay federal taxes. Is there an understanding right now of how big those economic implications could be, especially when it comes to just the labor market overall?
Yeah, and again, I think this depends on the scale of any deportations that we see, because where there's broad agreement is that immigration is good for America. But the question is always between high-skilled immigrants, people coming here illegally across the border. In America, we've long had the idea that we need a secure border, and we need to pair that with a better way to get into the country legally. And that solution has evaded Congress and the presidents for a really long time. And so if we're able to come up with a solution that can kind of solve both of those tools right there, we may be able to avoid significant economic fallout, but it really just depends on how the president chooses to enforce this. There's talk of a potential large immigration raid in Chicago on Tuesday. These kind of early signs will give us an indication of how significant this deportation program will be and how much of an impact we'd see on the U.S. economy.
Yeah, I guess a lot of it is just how much can be done at what scale, right? So if the question is on the scale and the uncertainty, it seems we know what the president wants to do. How is he able to do it? What will be the big metrics on what decides the scale of all of these actions, whether it's on immigration, whether it's on tariffs, whether it's on tax cuts? How much of it depends on Congress? And given, of course, that Republicans have the majority now, is it more possible that Trump 2.0 will be able to achieve much more than Trump 1.0?
Well, absolutely. So a couple of big differences between the two administrations. When Trump came into office the first time, it was a little bit of a surprise to America, and I think a little bit of a surprise to him. And this time around, he has a clear agenda. He has a much more disciplined team, and he has won the popular vote. And polling shows that Americans, even if they don't support him or like him, support a lot of his policies. And so he sort of has this mandate right now to engage, and how he uses it will be the big question, and we'll see a lot tomorrow. There's talk of up to 200 executive orders that he would sign tomorrow. And just for context, President Biden signed 9 executive orders on his first day in office, and that was the most of any president in history. And so Trump, if he does that, will far surpass that. And so that'll give an indication of what he's thinking in terms of priorities and what he plans to do from the executive branch versus what Congress will need to engage on.
What you're saying about really these politicians and policymakers needing to engage with Republicans now is very interesting, right? I mean, we have seen even business leaders now flocking to Mar-a-Lago, the likes of Satya Nadella, the likes of Tim Cook, not to mention that Mark Zuckerberg is adding also Trump supporter into his board. What sort of Republicans do these businesses and policymakers and global leaders need to engage with? Because it seems that what people thought was the Republican Party is no more with Trump.
That's absolutely right. I mean, Donald Trump has remade the Republican Party in America. And I think that there's some consternation about that in some circles, and there's a lot of frustration. But there's also a view that Donald Trump has been listening to Americans, and maybe the elite in Washington haven't been listening to Americans. And so there's the possibility that the Republican Party is really unified around a relatively populist nationalist effort, but there is, I think, unity within the Republican Party at this point in time. And again, there's opportunity in that. There's also a lot of risk. And it'll be interesting to see what the Democrats do as they kind of reassert themselves and determine where their party wants to go over the next 2-4 years and into the future.
Does this inevitably mean deglobalization just happening in the next 4 years? It's interesting that this week we have the World Economic Forum in Davos, and it was really seen as a hub of progressive ideals, not to mention globalism, of course. Will we see a retreat from these values?
Well, I think you started to see a retreat in Trump's first administration. The tariffs he put on, most economists were very unsupportive of those, but those tariffs were continued under the Biden administration for the most part, and they will continue and potentially be accelerated under a Trump administration. The question at hand is, how much does America want to engage in the world? Polling shows that most Americans want us to be less engaged in the world. And so the challenge here is to understand, how can our engagement in the world benefit Americans? Because there's just this American first sentiment here that Donald Trump has tapped into and has kind of become the face of.
And Andrea, of course, we are expecting what President-elect Trump has called about 100 executive orders. Governing by executive order is not necessarily leadership. I mean, this can be undone by the next president that comes in, right? What will Trump need to do in the next 4 years to have a lasting legacy? And will we see a lot of the legacy from the Biden administration being undone by these executive orders by President Trump?
So I think in terms of the Biden legacy being undone, you're probably going to see some executive orders that repeal some electric vehicle mandates, opens up oil and gas drilling, limit some renewables. So those are definitely counter to what President Biden pushed during his time in office. But you bring up a really interesting point about Donald Trump's legacy, because he's coming into his second term. He's a lame dunk president, and so he's probably going to be thinking about what impact he's going to leave on the world. How are the history books going to recognize him? And so how he engages could be influenced by how he thinks his legacy could be. But he has 2 years with a Republican-controlled House and a Republican-controlled Senate, so there's definitely a lot that he could do.
Andrea, Christianson, partner at Penta Group, as we await those executive orders and, of course, the inauguration of Donald Trump. In Davos, CEOs and business leaders bracing for Trump's return to the White House while abandoning some of their previous ideals about equality, diversity, and climate change. That's the topic of today's Big Take, which subscribers can read on the terminal. NI Big Take is your function. Also, head over to Bloomberg.com. Bloomberg will have special live coverage of the Trump inauguration across all our platforms coming up at 11 a.m. Monday Eastern Time. That's midnight in Hong Kong, 1 a.m. Tuesday in Tokyo. More ahead. Stay with us. Welcome back. You're watching Insight. Here are some of the stories that we're following. A long-delayed ceasefire in Gaza is taking hold, with Hamas releasing the first of 33 hostages. 3 Israeli women were reunited with family members on Sunday and taken for medical checks in hospital. Israel has also released 90 Palestinian prisoners, and Egypt says at least 330 aid trucks have already enter the Gaza Strip under the ceasefire. This comes as Donald Trump vows to stop the chaos in the Middle East.
I will end the war in Ukraine. I will stop the chaos in the Middle East, and I will prevent World War III from happening. And you have no idea how close we are.
A South Korean court has issued a fresh warrant to formally arrest impeached President Yoon Suk-yeol. It allows investigators to keep him in custody for up to 20 days as they look into his martial law declaration. If charged within that period, Yoon will stand trial and can be detained for up to 6 months. Yoon's formal arrest ignited unrest at the Seoul Western District Court, where the Associated Press reports dozens of his supporters broke in, damaging doors and windows and throwing objects, with police arresting 90 people. China's military says it conducted naval and air combat readiness patrols in the South China Sea on Friday and Saturday. A statement by the Southern Theater Command did not specify exactly where the patrols happened. On Friday, the Philippine Navy said it was holding drills near a disputed shoal where a large Chinese vessel had been seen. Take a look at how we're trading in the Asian session right now. We're seeing broad upside across markets. We continue to watch the latest developments from President Trump and his comments on 100 executive orders to be signed in the beginning of his presidency. You're seeing the Hang Seng Index also at the highest level since December. We continue to watch Chinese policymakers' actions. Nothing on the loan prime rates today. Commercial banks left that on hold. The PBOC has been reluctant to cut rates given the pressure on the Chinese yuan as we continue to see a stronger U.S. dollar. Of course, this week is all about the Japanese yen and the Bank of Japan policy decision. The yen continues to strengthen towards that 150 level. Coming up, Tribeca Investment Partners portfolio manager Junbei Liu joins us to discuss the markets. This is Bloomberg. Welcome back. You're watching Insight. Markets are waiting for clarity on Donald Trump's agenda ahead of his inauguration in the coming hours. Despite recent declines, the dollar is expected to see more support as the president-elect starts his second term. Avril Hong is in Singapore with more. And Avril, of course, 100 executive orders expected, a lot of them expected to be inflationary. What's the outlook for the currency and other U.S. assets at this point?
Yeah, Sherry, I mean, it's really going to be dependent on these executive orders on day one, the speed and scale of tariffs, the immigration policies. There's going to be a lot for traders to digest. I mean, all this we've already seen. Based on the Bloomberg Dollar Index, the greenback climbing about 5% since election day, and those currencies that have lost the most ground include those that are seen as having the most to lose from Trump's policies. You think about the loonie, the euro, EMFX. Despite this, as you just mentioned, the greenback is expected to remain supported. You think about even if these executive orders come in less aggressive than anticipated, the positioning in markets has been very, very much in favor of the US dollar. So traders might see it as too soon to unwind some of those bets. Flip the board, of course, some of these policy proposals seen as inflationary, as you say, that's really weighed on long-term debt, and yields could climb even more than what we've already been seeing despite the Fed cutting. There's very, very negative sentiment in Treasuries markets, and we've already also seen some steepening in the 2s and the 10s curves. In terms of stocks, we're seeing futures looking a bit lower today, but we've also seen how that Trump bump has been more or less erased since election day. And of course, this is as the Fed worries weigh on equities. There are some that think that equities could be protected from downside because of Trump. Flip the board again, something that's really shot up amid Trump's victory, of course, as you know, Sherry, is cryptos, not just Bitcoin that's gone past 70 and past 100,000, the broader complex as well. They've kind of struggled over the weekend after Trump unveiled his meme coin that briefly crossed the $15 billion market cap level, then fell back to $10 billion as Melania Trump unveiled her own meme coin. All this speaks to the speculative demand for such assets. And of course, that's risen or raised these concerns about conflicts of interest. So we're seeing support for meme coins, crypto complex, dollar as well, Sherry.
Yeah. We'll be watching those concerns about conflict of interest throughout his administration. April Hong, they're joining us from Singapore. Let's actually discuss the markets and get some more insight on what we can expect in the first 100 days, in the first few months of the Trump administration. Tribeca Investment Partners Portfolio Manager Junbei Liu joins us now live from our Sydney studio. Junbei, always good to have you with us. I mean, we were talking about the crypto space, that surge in Trump meme coins, Melania meme coins as well. Animal spirits returning perhaps also to speculative parts of the market. What will you be watching in order to sort of get a sense of where we're headed in the broader markets in the first few days of Trump?
Look, in terms of, what we want to see is that, continued sort of support and, continued talk of deregulation for small businesses and for, financial markets, financial institutions. I think all of these will be very positive. That's what the market is looking for. Now, there is a little bit of fear about what he might say in terms of tariff. Now, is he going to come out with a very sharp or heavy-handed tariff on day one? It's probably unlikely, but if he does, that's going to create a bit of issue in terms of the long bond yield and what that means for U.S. economy, what that means for the global growth. That might create a bit of sell-off, but to us that's a little bit of a tail risk. But at this point, certainly we think it will be a bit more optimism in terms of talking about some deregulation. In fact, if we look at some of the confidence in terms of the small businesses, consumer, they have improved quite drastically in recent weeks. So so we're looking forward to what he might say tonight.
Yeah, will it be another year of that just American exceptionalism when we're talking about the markets, when we're talking about the strength of the U.S. dollar? And what's the risk of thinking that perhaps this time is different? Because you're seeing a lot of people getting FOMO at this point.
Yeah, look, I do think the U.S. market is well supported at this point. Whether they will continue to be the best performing market is a bit harder to say, because we know last 12 months, majority of the outperformance has been the technology businesses, and we think they will continue to do pretty well. However, there are other parts of the market where, we call the cyclical parts of the market, with the cuts in the interest rate, with the improvement in the SME part of the market, should see pick up in a lot of earnings. And so we think that part of the market will do well as well. And also, I think what's also going to be, pretty healthy for the equity market over there is that there will be a broadening out of the rally. So instead of just 7 companies, the technology businesses do well or getting more expensive, it's actually a lot of other smaller companies where the earning has been impacted in the previous, few years, or the companies that's more earnings more leveraged to sort of cyclical improvement in economic activity. So we think these businesses will drive the market higher over there. Financial institution like the banks, deregulation will help them, we think they are going through, next 12 months is looking pretty strong for them. Not only the deregulation will be strong, it's the deal flows improving. We're seeing the trading volumes up. So it's pretty good environment for the U.S. equities.
Are we thinking when you talk about financials, the big financials, or will that trickle down to the smaller names and regional banks as well?
Yeah, look, they always say, look, it is the bigger financials. So clearly, it will be the big beneficiaries of a lot of those changes, improved deal flows and others. It's the regional bank has the challenge is when the overall sector is doing well, there will be, what do they call it, the tide raising all boats, right? So you will have the more leveraged, the smaller, lower quality businesses doing better, in the environment where everyone is making more money.
Junbei, we're getting breaking news at the moment. So President-elect Trump is expected to invoke emergency powers as part of his plan to unleash domestic energy production, while also seeking to reverse some of President Biden's actions when it comes to combating climate change. This is according to people speaking to Bloomberg, and we've learned that the move is said to be among a series of actions that the new incoming president will take, starting hours after he's sworn in on Monday to deliver on those campaign promises to boost domestic energy output. Trump is prepared to compel policy shifts that would enable new oil and gas development on federal lands while directing a rollback of Biden-era climate regulations, according to people speaking to Bloomberg. So we'll be watching those energy stocks, the energy sector. Junbei, how closely focused are you on investing on some of those energy names with links to fossil fuel, which seems to be what will get the president's support?
Yeah, look, absolutely. I think a lot of those projects, we're expecting quite a few projects to get approved by, by him in the early days of his presidency. And clearly, this is the first step. You're already seeing he's doing so. What that does also mean that potentially there's a bit of a weakness across the energy prices because, and then in a way, it is offsetting potentially some of his other policy might be inflationary, per business, per consumer might be inflationary. So, in a way, it's good for the consumer there in the US, and it's good to see him actually now already taking steps.
Yeah, when it comes to the energy sector, though, a lot to do with the biggest energy consumer, China, right? I mean, given the challenges that we're expecting with the Trump administration coming in, despite the little bit of thawing of relations with President Xi Jinping speaking to the president-elect, what are the implications for Beijing in the first few months of the Trump administration, especially when it comes to how they deal with the markets and market functioning as well?
Yeah, of course. Look, so if we're talking about the energy market and the like. So we like energy companies, simply because their valuation is at very low levels. China is about 17 or 20% of consumer of the overall energy market globally, and probably growing. And should China improve somewhat, and then global growth in a way sort of pick up with the rate cycle, there should be upward pressure in terms of the energy as a commodity complex, and energy equities looking very cheap at the moment relative to other commodities. Now, the thing with Trump is that, by increasing a lot of productions and allowing, more supply, it will create a slightly negative sentiment, in the short term towards energy prices, which we saw towards the end of last year. But I think net with the overall economic activity, going to pick up globally, we do think the energy equity is in a pretty good place.
We're seeing a strong day for equity markets across China. The Hang Seng Index at the moment gaining more than 2%. Is this a valuation play as well? Are we seeing some good enough deals to attract capital again to the market?
Look, well, certainly we hope so, but it certainly seems that everyone's very excited about this strong quarterly GDP number out of China, and on a quarterly annualized run rate, it's phenomenal. But of course, I think one word of caution is that quite a lot of that growth in the last quarter of the calendar year last year for China was a lot of pull forward that we're hearing. Companies are pull forward a lot of transactions and trade movement and product selling simply because ahead of what might come, what Trump might say about the tariff. So so there's some of these are a little bit one-off, but we certainly hope that they will continue to stimulate the economy, because we are seeing some of the car sales numbers look good and some of the smaller businesses numbers look good. So they need to keep stimulating to keep that momentum going.
And do you expect the momentum to continue here in Japan? We are headed towards the Bank of Japan decision, but I wonder if we're going to see more yen weakness come the Bank of Japan decision, given that we're seeing significant strength right now.
Yeah, that's right. So look, I think the expectation is that they will put up rates, sort of 50 basis point in the next decision time, and potentially slow and slow pace to continue to support the yen. And also, of course, they're looking at what inflationary policy might come through in the US, so taking some of those preemptive move. Our view is that look, Japanese economy is doing well. It's very much linked to what is going to happen in America, and it's very cyclical. So I think with the U.S. economy is actually going quite well and will continue to do well. It will have that continued strong flow on to the Japanese economy, that's hence why I think that inflationary pressure will continue to be there.
Junbei Liu, always good catching up with you, portfolio manager at Tribeca Investment Partners. Thank you so much for joining us. And still ahead on Insight, we'll continue talking about Japan, because we'll be watching one of its companies, Rakuten, is billionaire founder Hiroshi Mikitani dismissing skeptics who think the company's foray into mobile was a mistake as it looks to bet big on AI. Our exclusive conversation is next. This is Bloomberg. Welcome back. A busy week for global earnings coming up, especially in tech. Investors will be watching for fresh signs of growing AI demand from the likes of SK Hynix, Disco, and Nidec. Both SK Hynix and Disco are NVIDIA suppliers, and their outlooks may get a boost from the newly announced Blackwell chip line. Staying on AI, Japanese e-commerce pioneer Rakuten is seeing a big opportunity in this space as Japan plays catch-up in the adoption of digital and AI-powered technologies. The company is preparing to launch an AI assistant it says will serve as a travel and shopping agent. The company's billionaire founder Hiroshi Mikitani also says its telecom arm is central for the future growth through AI. That's despite the decision to enter the country's cutthroat wireless market, saddling Rakuten with 4 years of losses. I asked him whether Japan has enough energy to sustain their AI ambitions.
Using AI, in general, we may be able to reduce electricity consumption. 90% of electricity we are using in Rakuten Group is coming from mobile business. Of course, we have a big data center. All these radio stations use electricity. But in 2025, we are going to reduce our electricity consumption by 20% using AI.
We also took an exclusive tour through the Rakuten office in Tokyo, where the CEO told us more about their international investments as well as preparations for the Trump administration. Is globalization and more global business the future of Rakuten?
Well, obviously, our business is network business based on internet. And it seems like there's a little bit of the segmentation by geography, but it's globally connected. So unless maybe Chinese players are a little bit different because it's kind of legally separated, but we need to really make sure that we are the one using best technology, we are providing the best service, even for our domestic business, or otherwise I think we're gonna start sacrificing our growth. So I think being global is very, very important.
Growing globally, does that mean organic growth? Are you thinking of acquisitions as well?
Well, now organically, right? Yeah. I think it's more important that we do not really have an appetite to make a big acquisition. Now we're focusing on mobile business in Japan and expanding our mobile technology business globally. So we do not have any big plan to make a big investment.
You've already made such big investments inside Japan. I know that you're basically invested in almost every major sport around the world.
Well, yeah, maybe.
As a CEO, how do you really think about what to prioritize, where to make those investments?
Well, the sports business for us is, of course, it's business, but it is the best marketing sort of strategy for us. Associating our brand to the sports, I think we can not only improve our brand awareness, but I think we will be able to really, bring our kind of value to the consumers. So that's very, very important.
I know that you've also decided to make investments based on very personal passions. Rakuten Medical, for example, is one that stemmed out of your own father's struggle with cancer. Tell us a little bit about how some of those issues drive your business mindset.
Well, I think it's the medical field is something we need more entrepreneurship. If you think about, COVID-19 period, of course, the Moderna, the Stefan did a great job bringing entrepreneurship to vaccination, and definitely they really saved maybe hundreds of millions of people or even more, but it came from their entrepreneurship as well. We are bringing entrepreneurship to biotechnology to really help the people who are suffering from cancer with a completely new idea, new approach. So, and then it's already commercialized in Japan. We have commercially treated more than 800 patients in Japan, and hopefully we will be able to say more.
We've talked about your businesses here in Japan and how you continue to grow, but at the same time, demographics is an issue, right?
Yes.
And the fact that it's not a fast-growing economy anymore, the economy is recovering, but long-term, when it comes to the thriving and surviving Rakuten 20, 30 years down the line, do you need to think more about investments overseas? Well,
I am a strong believer of the potential of the Japanese market or Japanese economy. But at the same time, I think the Japanese people need to change their mindset. Well, we have a very good aspect of Japanese community and culture, which is like a very stable, very peaceful, hardworking. But I think we have to, bring in more people from outside of Japan, more immigration. We need to lower our government spending and tax so that we can bring in more talented, intelligent people from outside to Japan. And then we need to sustain our population. So, two things we are doing is, one is, of course, we're expanding our international businesses. That's one. Another reason I decided to take a very big risk on mobile. The second thing is, we are communicating very, very closely with the leaders of Japan because we are kind of the leader of a younger generation. So we're now trying to, basically push their back and, wake up. And then I think, many people wanted to come and live in Japan. We need to open up. We need to open up. We need to change the society and the way people think.
Do you think the new government right now could be doing enough?
I hope, but at the same time, we need to bring in more dynamism to the political environment in Japan too. Right? I don't think there will be, of course, pros and cons on what's happening in the U.S. right now. It's dynamic, but at least they are tackling the issues.
Perhaps too dynamic? There's a lot of concerns about the incoming administration.
I don't know. We'll see. I don't want to make any pre-statement about it. Yeah.
Do you plan to work more with the U.S., expand your U.S. business? We know that a lot of Japanese companies want to invest.
Well, our U.S. business is growing fast. Rakuten Rewards business, Kobo is profitable, Biki is profitable, and our mobile business has a very, very strong sort of cooperation with U.S. Telecom Administration, because obviously, if you think about physical world, now it is not the case. But if you think about digital road, which we call mobile connectivity, 70% of the digital road is connected with Chinese devices, and we have to, of course, more democratize it, and U.S. has incentive to do so. So I think there's a huge, sort of a similar perspective about this.
The tech rivalry between Beijing and Washington, does that concern you, as you said? I mean,
we are in the middle spot.
Yeah.
I think obviously I don't care about whether U.S. or China, but we like democracy.
My exclusive conversation with Rakuten Group CEO Mikitani. Of course, we continue to watch how markets are bracing for the inauguration of Donald Trump and potentially 100 executive orders to come in the first few days. Right now, we're seeing upside for the MSCI Asia Pacific of more than 1%, being led higher by the likes of consumer discretionary and healthcare stocks, and a big rally when it comes to the Hang Seng Index, especially the Hang Seng Tech Index at the moment gaining 3%, the best day in about 6 weeks. Of course, we did hear about that positive conversation when it comes to President Xi Jinping and President-elect Donald Trump, and the fact that both sides do want more conversations and deepening of conversations going forward. But before we go, here's a look at some of what we have coming up tomorrow. We'll discuss the outlook for digital assets with Coinbase Singapore as the pro-crypto Donald Trump returns to the White House. Plus, more on the markets under the new administration with RBC Wealth Management's Jasmine Duan. And Bloomberg will have special live coverage of the inauguration across all our platforms coming up at 11 a.m. Monday Eastern. That's midnight in Hong Kong, 1 a.m. Tuesday in Tokyo. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.